All right, well, welcome to the client support webinar for today. You should be able to see my screen that says welcome, client support webinar. So let me know if you don't see that and if you have trouble hearing me. But we did an audio test and visual test, so everything should be all set. All right, so today is October 11th, 2023. A couple announcements here. One, first of all, don't forget that all the recordings for the client support are now located on our YouTube channel, but they're unlisted. So you have to access those through the special link in the client VIP area, you know, that area where you log into. And you'll see a link for all the recordings that will take you to all the unlisted ones. So those are available. And we try to keep a bunch of them up there so you can go back and we kind of put in there a little bit about what we talked about that day. And so if there's a topic that interests you, you can always go there and check it out. All right, Jean, any announcements today?
Well, welcome everyone. Good to see you all here. I guess the main announcement would be sure to join us for Stock Analysis Fridays, and that's every Friday on YouTube at 8:30 a.m. Pacific time, and I just posted a link. If you can see the link, do me a favor, just give me a hello or yes, I see the link in the questions area. That lets me know that everything is working. I think that's about it, Ben. Back to you.
Okay, great. And the other thing too is we have for our Oracle subscribers, we have our monthly webinar tomorrow. So don't forget about that. That's on Thursday. And we're going to talk, of course, the Oracle, the purpose of the Oracle. Let me just do this real quick because I think this would be kind of a good thing to do. So, you know, we have the MOR report, right? We have what we call Oracle. And we also have Yummy. So those are our primary subscription services. And people sometimes get confused because what do? Okay. All right. So on the MOR, what we do is every Sunday, all right, we release a comprehensive report on the market forecast. And this includes the Dow Jones Industrial Average, the NASDAQ, all right, and the S&P, okay? So that's what comes out on Sunday. Then in addition, we have the stock picks, all right? Sometimes we call them opportunities, but anyway, they're stock picks, okay? So that's what you get with the MOR service, and that's every Sunday. And then you get a written report, and then you get a video, and I do a video every Sunday. So the purpose of the MOR is to not only give you an update on the market itself by looking at the Dow, the NASDAQ, and the S&P, but we also have an update our stock picks. And in the stock picks, we give you the entry, exit, option, and target. Okay, so you get all that with the stock picks and what we recommend. And then we have, you know, active list and we have a holding list. So some stocks, what happens is that we put you in a stock and either it gets too close to the target price, so it goes on a hold list, or maybe some of the underlying charts, the shorter term charts, all right, may be showing a little bit of a pullback, nothing major, but we don't want to recommend it if you're getting a little pullback, so we put that on a hold list. And when the pullback's over, we put it back on the active list. So the stock picks are a very comprehensive, dynamic flow of what we feel is good for the upcoming week. And in the written report, we have all the information on the stock picks, plus all the information on the forecast. And the written report is a PDF file. So you can download that to your desktop and have that as a reference for all the markets, etc. And we have a lot of other information in the written report. We usually have, I take from the wire out there, anything important regarding the markets or interest rates. Fear and greed index indications are in there. We also have links to analyst upgrades and downgrades, all the stock picks, like I said before, and then other hyperlinks as well. And then also I do a video And on the video, I go over, okay, I go over all three of these markets with the charts. So I walk you through what's going on with the market and talk about different key levels of support and things like that that you need to watch out for, as well as resistance levels. I go over the stock picks, and any new stock picks, we always include a chart along with the risk to reward calculations. And so that's the MOR report. It's very comprehensive. And then we come to the Oracle report. Now, the Oracle report, we cover the markets again. We cover the Dow, okay? We cover the NASDAQ, just like we do in the MOR, and the S&P. The only difference here, okay, is it's not a weekly service, all right? What we do is we basically meet once a month, but we do update the charts and a written area on the Oracle report weekly. So in that way, it's very similar to the MOR, but there's no stock picks, okay? So if you're interested in stock picks, all right, you want the MOR service, so no stocks. The other thing about the Oracle, which is really great, is that we actually tell you what markets or vehicles to use to take advantage of what we think is going to happen in the market. So for example, if we have a sell-off predicted at a certain level, we're going to tell you what ETFs, all right, and what particular things you should do to get prepared for what we think lies ahead. For example, you know, we talk about housing, we talk about credit card debt, we talk about all the stuff you need to do to get your house in order for what we think is happening. So we actually give you specific vehicles, specific ETFs, and also options, all right, and what we recommend you to talk to your financial advisor about to bulletproof your portfolio, for example, if we think a downtrend is coming. Likewise, when we think an uptrend is coming, maybe we've reached the bottom level, we're going to recommend certain stocks and when to jump in it. So the Oracle is more detailed in describing exactly what products and things you need to do at any given time in the markets based on the forecast. So that's a big difference, and people like that. They want to know, okay, what ETF should I buy in order to bulletproof my portfolio? What should I talk to my financial advisor about? Should I sell my long-term holdings? Is it worth it? Okay. Is there a way to hedge my portfolio that my stockbroker may not be aware of? All right. Hey, I have an IRA account. What do you suggest I do in that? Things like that. We get into the nitty-gritty in the Oracle, and then we meet once a week to go over that stuff and answer any questions that you may have. All right, and then in the Yummy, think of the Yummy as short term, all right? We basically talk about what's happening that week. And the interesting thing about the Yummy service is really that the reason we created the Yummy is that for two reasons. One is many of our clients wanted an area where they could go, a room where they could go and share ideas and talk about stocks and meet others that are using our system, etc. So we developed Yummy, but also too, I used to do a comprehensive market report for a company called TradeStation. Many of you might be familiar with that. And I did it every Wednesday in the morning before the markets open for TradeStation. And it was a market forecast. And then TradeStation changed their model and they hired people inside their company to do those. So people were saying, well, we want Bennett's report. How can we get that? So we decided to do the Yummy Room to fill that gap. And so we do cover, just like we did in TradeStation, the Dow, the NASDAQ, and the S&P of what we think is going to happen just that week. It's not really considered anything comprehensive like the MOR or the Oracle. It's just to basically give you an update short term on what to expect for the week. So that's the purpose of the Yummy. And then of course we keep the room open all day, all right? And that way people can come and go as they want. And certain organizers or certain folks in the room decided to take a leading role, and so they lead the room for a particular time period during the day, and you can join them, and they talk about stock opportunities they're looking at and so forth, and they have a lot of fun in there. So that's the Yummy. The Yummy room's more for kind of a fun environment where you can hop in, more social, all right, where you can hop in and hop out. So that, in a nutshell, really is the difference between MOR, Oracle, and Yummy. And we're getting a lot of questions on that, so I wanted to cover that. How many people belong to the MOR report, just out of curiosity? Give me a show of hands or say yes in the questions area. All right, good, quite a few, excellent. All right, and how many are out there in the Oracle? How many use the Oracle? Because we've got quite a few people here today, so okay, good, quite a few in the Oracle too. All right, and how many people are Yummies? We call them Yummies. How many people are Yummies? All right, good, we got a pretty good group of all three. How many people belong to all three? All right, so tell me, if you belong to all three, put 3. If you belong to 2, tell me which 2. If you belong to 1, let me know which one you belong to again. Cool. All right, quite a few people, all 3. Okay, good, good. All right, the other thing too is, all right, let me see some more people coming in here. All right, a lot of people do the MOR in the Oracle, okay, that are here today. Okay, good. So the other thing too is we have different types of subscription services that you need to be aware of. For example, you can do them on a month-to-month basis. So if you kind of want to kick the tires and just see what it's like, you can get a 1-month subscription. You can cancel at any time. We do have 6-month subscriptions, all right, and yearly subscriptions. So you can cancel at any time. There's no refunds on any of the subscription products, but you can certainly check them out and test them. But we've been doing those a long time, and they're a lot of fun. And if you have any questions on that, feel free to ask. But I did want to share that because of the fact that we seem to get a lot of questions on which service is best, and that's going to really depend upon you personally, okay? All right, great. All right, good, glad you like it. All right, so let's move on here a little bit, and I've got TradeStation up here. This happens to be, I think, Apple, and that's on a 3 time frames. I've got Ninja running in the background as well. Check out all these beautiful pyramids on the way up for this on the weekly chart. Look at that, boom, 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 finally stopped out over here. Kind of interesting, nice move. Could have stayed in that for quite some time, almost from the beginning of the year till the end of really July, just about, so pretty nice. So any questions on the software that you may have out there, platform questions, feel free to ask as well. All right, seems like everybody's in pretty good shape. I always love to hear that because that means everything is working good. All right, here's Ninja, okay. So we got Ninja, TradeStation. We also work on multi-charts, MT4, which is for forex folks. And then they have MT5 for stocks as well. And then we have eSignal. We run on eSignal too. What about psychology? Has anybody hit any roadblocks with psychology? What do you think about that? Any psychology issues people may be having? Because psychology is a tough part of the game. No matter how long you've been trading, it's always something you're going to have to contend with. It's part of the human condition. So, I mean, I even have to deal with it as well. I find when I have my software and my signals and everything, it certainly helps me deal with not acting necessarily on some of the psychological issues that can be present during trading. So more structure in the terms of approach is good. And you may certainly incorporate scaling out into your structured approach at certain times. But the nice thing about that is it's structured, okay? It's structured. So when I scale out, for example, I usually like to use a PTF when it's going from either a green or a red to a yellow. I'll scale out at times using that. How many people find day trading harder than position trading? How many people find day trading harder than position trading? Yeah, quite a few, right? Well, the reason for that is because of the fact you're sitting in front of the screen, right? And so your emotions are focused. You're focused on the price movement. And if you find yourself getting sucked into that market, it certainly can get very emotional. Sometimes the best thing to do is if you go into a market and you have your stop set, to actually walk away a little bit, okay? Depending on how short a time frame it is, you can't walk away too long, right? But you can walk away maybe for a minute so you're not sucked into the movement of each price bar. So if you feel like you're getting stressed out or you feel like the anxiety level's up, walk away a little bit and then come back. That's what makes position trading, you see, so much easier, so to speak, to contend with psychologically, is because you're not watching every price bar. You know, if you go in on a daily chart, you're not going to watch the daily chart price bar, okay, because it's only one price bar, right? So you're going to probably look at that at night or maybe every couple days. And I strongly suggest people that, you know, obviously have a job and so forth, definitely focus on the positions for trading, because that makes sense for you, because you're not going to be able to have the time to check in sometimes on the positions like you need to for day trading, right? So we have quite a few doctors that use our system, and they position trade, of course, and they find it just great because they can review it at night. After the market's closed is okay, put their orders in for the next day if they need to, or adjust their stops. But it's in a relaxed environment where they're not feeling the push to have to look at it during the day so much, right? Now, if you have the time and you do day trade, what I recommend is, and you have certainly, you know, the funds available for that, always make sure you trade with money you can afford to risk, right? Called risk capital. But the idea behind that is that what you want to do is focus on maybe opening up 3 different separate accounts, brokerage accounts. You can have them all with the same brokerage, but 3 different ones. Have one for day trading, one for position trading, and one for your long-term stuff. And that way, you don't mix them all together and get wishy-washy on the results. So if you have one for day trading, like for example, if you day trade futures like we do, have an account for futures, day trading. And that way you'll know right away, you know, when you fund it and you start trading, are you up or down? I mean, you just look at the account value. If that's the only trades you're doing in that account or day trades, you're going to know right away how your day trading is doing. All right, same thing with position trading. And it's a great way to segregate your different styles of trading. And you'll find also, after you do this for a while, you'll find certain market cycles are better. You'll have better results in your day trading account sometimes, but then you'll have better results in your position trading and your long-term trading as well. And usually, you know, if you've reached some type of new trend area, let's say we have a sell-off and now we have a new trend, then you're more apt to do better probably position trading and long-term trading, because you can buy and just hold that because you can participate in the new trend. Whereas when you get into a corrective market like we are in the Dow, all right, you can find the right time frame, okay, to find which particular market is best for which time frame is best to trade that cycle. And that's when day trading can be really good. All right, so, and then you'll find, actually when you do that, you'll find the profitability on your day trading account going up higher than your position trades, which may be getting whipsawed during those certain market cycles. Whereas when you day trade, you can take advantage of the shorter distances between the whipsaws and make money that way. So there is a place for day trading, but you need to have the time to do it, because it is time. It takes a lot of energy, okay? It takes a lot of energy. So that's kind of important. So any questions on that? And just remember, my suggestion, if you're position trading and you go down to day trading, what I would do is do it in a simulated fashion until you get the hang of it, okay? Because it is different. Now, one thing I will say, what's kind of interesting, for example, if we go down, let's just say to a day trading ticker here, I'll just put the M2K up here. You know, here's a 1 minute time frame, okay, in the middle, 15-second here, and a 5 minute here. All right, so when I day trade, I really don't deviate from that. I really don't change things around too much, because this is a completely adequate time frame for short-term trading during the day. And the thing about this is that you'd be surprised at how long sometimes we have to wait for a trade. Because if the market trends, let's say early in the morning, and you show up at 8, like we do sometimes when we have our day trading room, the big trend is over. So we're stuck with the corrections, trading the corrections, okay? So you have to wait for the right setup to see if you can get in for maybe a counter trend trade or even just a scalp based off the PTF and so forth. So, you know, after a trend, all right, you can either sit and wait for the next trend, or you can become an expert and trade the corrections. And this is totally up to you on how you want to do it. Or you can go get a bite to eat and wait for the next trend. But sometimes you have to wait 40 minutes, even on a 1 minute time frame. So it's not as fast as you think. And again, that's going to vary between person and person, because some people will really want to scalp the markets more than look for intraday trends. And that's fine. So you'll be busier that way. Or you may decide to trade the 15-second time frame during certain periods, okay? And that will keep you more busier than trading the 1 minute, obviously. But people kind of get a little afraid when they hear a 1 minute time frame. They think, oh my gosh, that's so fast, how do you do it? It's really not. But you should practice with it. Go into a simulated environment first and get used to it. Get used to all the order placements, because you have to have those down pat in order for you to execute properly on an intraday time frame. And things like calculating your trade size. You know, when we trade intraday time frames, we always calculate our trade size. So we're always operating within that structure, never to exceed the maximum amount that we trade. All right. All right, so let's see, Jim, please show me, he's asking me a question, please show me again how you link 3 charts to the proper time frames to each market analyzer. Sure. Okay, so Jim, you're using NinjaTrader, okay? So what you want to do, all right, on, for example, on NinjaTrader, on the market analyzer. So here's the market analyzer up here. Notice that I'm looking at my day trades down here. Do you see that? Okay, 5 minute, 1 minute, and 15 seconds. Currently, I have it on the tab of real estate ETFs that I set up for daily scan, you know, day trade, not day trade, but position trade. So this is set for daily. So do you see this here? This little tab up here? Notice it's green, but these are all blue. So they're not linked. And the reason they're not linked is because these are intraday time frames. So instead of linking, I don't day trade these ETFs, so I have no need to link them. So instead, you'll find if I go to the tabs for position trades, they'll be the same color now because I position trade these markets, these ETFs here. Okay, so they're all linked there. But if we go to the day trading tab, which is micro futures over here, and then I go back to the tab down here for charts for my intraday, you'll find that those colors are the same, which is blue. See, blue and blue for all 3 charts. All right, so that's how you link them. So if you click on that if you go to the analyzer and click on that, all right, you can pick a color that you want to use for the link, all right? It's that simple. And then come down here and pick the same color for the instrument link here, okay? And when you have, if you add a tag and it's something other than day trading, well, then don't use the blue, right? Good, okay, cool, great. Glad you asked. And that's exactly what client support webinar is for folks to come and get clarification on some stuff. Perfect, love that. Well, that's kind of what I wanted to cover today. I wanted to cover a little bit about the differences on the MOR, the Oracle, and the Yummy. A little bit on trading psychology between day trading and position trading. And I think I've answered, I don't see too many questions come in, so I assume everybody's good out there. Is there any last minute things before we sign off today? Everybody doing okay? All right, good job, everybody. All right, well, just so you know, love having everybody here. You guys are just great. As I always say, I think I have the smartest people in the internet that come to our functions here. We're grateful for that. You guys are really spot on the ball here. And, you know, we thank you for being our clients. You know, we're here to help you. So let us know how we can help, okay? All right, so with that, I think we're good for today, and we'll see you back here next week, okay? Have a good one. Thanks so much.